What is infinite banking? That is exactly what we're going to talk about in today's video. Infinite banking is a very straightforward concept, although it's been around for quite a while, more than the past several decades, but that's when it just became popular through people such as Nelson Nash, and there's other individuals out there who have really popularized the concept. But ultimately, what is it? It's banking on yourself. So let's think about it here for a moment. When you're going to go and, let's say, get a car loan or a mortgage, what do? You go to a major financial institution and you sign some paper and you get a loan and you pay them interest and you pay back what you borrowed. That's banking at its core. When you're using infinite banking, instead of going to, let's say, the Wells Fargo's out there, the Bank of America's, you are borrowing from yourself through a life insurance policy with money that you put in there. And you might be thinking, well, why would I want to borrow from myself? Here's why. You don't have to qualify for it. And you can do it over and over again. And this becomes extremely powerful because here's where the magic happens. When you're borrowing from a financial institution, you're depositing your regular monthly paychecks from your job there. And what are they doing? They're taking those deposits and then lending it out to other people so they can get a mortgage, they can get a car, they can get a boat, they can do pretty much whatever, and they're making money on it. Well, businesses are supposed to make money, which is great. However, here's the flip side on it. They're using your money to do it. And what do you get paid? Last time I checked, when I looked at savings accounts, you're getting 0.0 next to pretty much nothing. And they're using your money to do it. So they're basically giving you nothing for your money, and then they're making a ton of money off of it. How do you win in that process when you're getting ahead and where you want to get ahead? This is where the power of infinite banking comes into play. Because what you're doing is you're borrowing from yourself and you're paying back yourself in this process. So I'll give you an example of why this is extremely important in the big picture of things. Let's say that you bought a house. Like here in Texas, where I'm located at, the average cost of a house is near $300,000. If a homeowner had a 3% interest rate on a $300,000 home, guess what they're going to be paying in over 30 years? Close to $150,000 in interest, and that's at 3%. If the interest rate was higher, you could practically double the amount of interest. So think about that for a moment. Where's the benefit if you were to let that much money go out the window? No one would ever want to do it. Yet we do that each and every day. Infinite banking is able to pull that back in. But to give you another way of looking at this and an easy way to implement it, let's talk about buying a car, because most people have bought a car and have bought several. Now imagine that the average consumer buys about 10 cars over their lifetime. And let's just say that the price of cars doesn't go up. Even though they do, it just makes it easier to work out the numbers and put this in perspective. Let's say that you bought your first car at age 30, or even let's make it age 25. You bought your first car. It could be even age 20. It doesn't matter when you do it. But let's just say for this example here, you did it at age 30. And over the next 40 years, you bought 10 more cars. And they're all at $20,000. And then each time you paid about $4,000 of interest. Over your lifetime, you would have paid out $240,000 in terms of payments for these. Now, granted, you're talking about, you have trade-in values, those things like that. But in essence, when you're financing these cars, let's say that you just keep trading the cars in, so you just keep getting a bigger and bigger car, but you've paid out that much money that's gone out the door. And guess what? You have nothing to show for it. However, this is the power of infinite banking. Let's say that before you bought this car, you funded your bank, and then at age 30 you decided, you know what? It's time to buy this car. So you traded in your old one and you bought this new one, you paid $20,000. So instead of getting that loan from XYZ Bank, you borrowed from your policy, your bank of you. And then over the next 5 years, you paid it back. And then you did it again and again and again. Now, where would the benefit be in this? Well, if you're using the old way of doing it, you spent, the $240,000 that you didn't capture in. However, by using this in the policy, because what happens is you're recapturing interest, you're capturing that growth. So your money never stops working for you. That's the key thing here. So over that lifetime, by the time of age 70, it has grown to over $480,000. If it was growing at 5.29% of a return every single year, just being conservative and averaging that out. Think about the power of that. Two scenarios, you're still buying the exact same car. In one, you're in the hole by $240,000. The other, you're up, $480,000. You didn't change anything except for one thing. You banked with yourself. That's the power of it. You're being able to recapture money that is going out the door. As an example, I told about the mortgage. If you use the same type of concept and you borrowed from your policy, you paid it back and did this over and over again, you could pay off a 30-year mortgage in half the time. That's right. And in the process, let's say you save $80,000 in interest payments using this exact same strategy. That's how powerful it is. I don't know about you, but if you could save $80,000 on your mortgage and interest payments, what can you do with that? That's a lot of money. And let's just be conservative. Let's say that you save $50,000 because you were a little more conservative with it. If you save $50,000, what does that do for you? You can do several things. You could buy 5 cars. You can be able to pay for 3 kids to go to a major university for in-state tuition. You can buy groceries for decades. The list goes on and on of the type of stuff that you can be able to do. But that is the power when you leverage infinite banking in your life. So you have a decision to make. You can still go out there, get the regular loans, and do these things there. Or you can be able to start recapturing some of those funds and start making a financial impact in the positive way with your family right now. So what I challenge you to do is this. Decide for yourself, what do you want to do? Recapture those funds or let them go somewhere else? You decide that, yes, this is what I want to do. I want to recapture that money. It's been going out the door. Go ahead and click the link below this video and let's set up a time to chat. Either myself, one of my team members, will talk with you and figure out what's going to be the best way to implement this strategy for you and your family so you can be able to, guess what, recapture those funds and put more money back in your pocket versus the bank of someone else. So I look forward to talking with you.